Bruce here, Naked Delta, just giving an update on where GME is with its liquidity and open interest at the moment. We can see here we got this recent kickstart in April-May 2024, and we saw this tightening here. This tightening here is good solid buying, and so is this one, even though we saw the price dropping back. This tightening here is reactive as market makers have had to chase the bid when we've had this small gamma event. And then we've had various tightenings that have given us these reactions here. Some of it could actually just be normal buying and selling. The thing that really is affects this is whether we get dispersion within the indexes. So when we have a high volatility period, it pushes GME down, and when we have a low volatility period, and we get compression of volatility, we get dispersion within the indexes. So if I just change this and we had a look at the dispersion index, and if we gave it an overlay of GME, I'll just put GME up above, we can see that when we have low dispersion index, we get these good bump ups in price. Here's another low in the dispersion index, and we get a gain of price. Again, we have a low here and we get a gain of price. So high volatility gives us a low price, low volatility gives us a ranging price. Well, we've just come through a period where we've had a low volatility and we didn't get a reaction there, and that was because the setup was much more normal within the open interest of GME. It was being traded in a much more normal way. If we go and have a closer look, we can see that recently, let's knock off this top one here, we can see in the different indicators that I'm using here, maybe we'll shut these ones down, in the irregular liquidity we can see we had a real charging event. We've had this very high loose selling liquidity here, which has given us this great drive down. That the gamers have used that opportunity to convert those puts that were selling the market down into, they've gamed the system quite well, and they've made big profits on it, and they've turned it into buying, and that buying has now been distributed out through this period here. And we can see this very tight liquidity here, the yellow line or gold line there being the 50%, so that's buying below, selling above. Again, here we can see in this time later liquidity, we can see the surface liquidity has been really tight, and now we're seeing some price appreciation. Now let's just have a quick look at what the OI says in the background. A couple of things on this chart here. We can see DPI up here, dark pool index or interest, and we can see that there's been significant, in the last couple of little bites at it, significant buying in the OTC markets. That suggests that market makers and dealers are being pushed to use the OTC markets rather than the lit markets to hedge off positions that they have sold, where they're having to buy the market back to flatten their books, and so we get this appreciation in price around that, or at least appreciation in the pressure being put on them to do something to hedge out there. Here we can see another area of high DPI before we got that bump up in 2024. Let's just see if they're being, we'll see if the IV, if they're being pushed in this shorter dated IV. Not much there to see, and let's have a look at that 31 to 60. We can see here that we've got this real squeeze effect here. We've just seen a little uptick here in IV. Very quickly we've seen an uptick. It'd be interesting to see if we can get a bit of trajectory to that, or a bit of momentum to that going forward. If we go down and have a look below, we can see that there is a large position. I would say they are sold puts. They are what are driving this higher DPI here, and also the price increase. So that's in the all. Let's go and have a look at the shorter dated stuff. This is shorter dated. I might take that out to 45 days. We've just seen rolled off here. This was the end of the month. This is puts on in the red, calls in the green. We can see we've rolled off a large amount of gamma, and that release in gamma has allowed the price to take off. If we put a 0.5 delta on it, there's that in the money. We can see that we've rolled off a substantial number of in the money puts. We've taken the ratio of in the money puts and calls from about the 0.75 right down to Friday, down to, as it started to roll off, down to 0.55, so down by 20%. And again today, with that bump, we've seen it really take off, and it's down under 0.1. What does it all mean? It means that most probably we're going to see some good price appreciation with this buying here, and if you get the indicators, you can follow this yourself and learn the tricks of the trade. I'm always training people on how to use these indicators, and we have a couple of little videos. You can look at our YouTube channel and you'll see liquidity explained one, and then you'll see how I trade with it and how we use all these different little indicators and pieces of data to help us on both investments and shorter term trades. Anyway, you can get all this at memestockwatch.com, or you can get it at nakeddelta.com. And please follow me on Twitter if you like seeing a reasonably regular update on liquidity on GME. Thank you very much.